Good morning and welcome to today's pre-market video. Now in today's pre-market video we're going to take a look at the news which is going to affect the Indian stock market. Plus we'll also take a look at the FinNifty Expiry. I'm going to take a look at the FinNifty Expiry in terms of what an option buyer should do, plus in terms of what an option seller should do. This is, as I've always said, that both have a completely different playbook to do, and especially on expiry day that gets brought to the forefront. This is option sellers on expiry day. Decay is their best friend, while option buyers, decay is their worst enemy on expiry day. So I'll take a look at what both parties should do. Before we dwell into that, I hope all who are watching today's video have also watched the video I released on Sunday. This is the analysis I gave for SBI and HDFC Bank, for Bajaj Finance and HDFC Bank is doing well, and it should give people good trades in the coming days. So if you have not watched it, then do head over there after this video and take a look at it. Now on the news front, there isn't much. On the international news front, there's only one news, that the Fed chairman will be testifying tomorrow, and everybody is waiting for that, as it will give a bigger signal on whether they will have one or two rate cuts. September is nearly confirmed that the rate cut will be coming. So now the main question is whether it's going to be one rate cut this year or two rate cuts this year. On the local news front, there's one positive news that has been released. This is that India's job market has witnessed a stellar performance in financial year 24, and it has shattered records with a staggering 46.7 million new jobs added. This is the highest number ever seen in the country. This remarkable surge marks a 2.5-fold increase compared to the prior year, and is even more impressive considering only moderate GDP growth was seen during the same period. So this is a good facet, and I think it will affect the market in a positive way, but as I every time say, the news will play out for the first 10-15 minutes, after which it comes irrelevant and we go back to the technicals. Now coming to the FinNifty futures. Now the FinNifty futures chart, if we load it, it's already loaded actually, and we pop on the levels. Now I have not had to update the levels from what I gave last week. This says we are not going anywhere. In fact, the people who watched my last week FinNifty Expiry video, which also gave everyone a profit, will see that the levels are exactly the same. I've not had to update anything. This is as we have basically traded in box range. I'm trying to get the pen out. We have traded in box range 1 here, then box range 2 here, and then box range 3 here. And all these box ranges have managed to stay between the key supports and key resistance levels I had given. This is in last week's video even, I had said that until we break out from basically 23,450 to 23,920 range, we are not going to get a big move. As in between this, we will keep getting this V-shaped moves like this, and we are not going to go anywhere. That's exactly what has happened. As we can see, we are constantly been in a box range. We tried to gap up, but then it got erased immediately by a gap down on top. So now how should option buyers and option sellers trade the FinNifty Expiry today? Now option buyers and option sellers who are trading the FinNifty Expiry today have to follow pretty much similar rules to what I discussed last time. Any intraday long will only, on the option buy side, will only materialize if we break 23,750, then it will be trying to reach 23,920, which is a high likelihood because it will have cleared the gap down resistance. As we can see, this is also the lower resistance line of the gap down window. So a break of 23,750 with a support from the volume indicator will drive us up to 23,920. That is a very key support, and if it gives up, then 24,080 gets opened up. On the other hand, if we break the support range between 23,450 and 23,520, then is only when we'll get a quick down move to 23,250. This is 23,300 is a good support, but I believe it will let some of the bears through and let it go to 23,250. This is a break of this is major news, and if that breaks, then 23,120. Now what everybody who is trading has to watch tomorrow is the trend catch indicator. This is if this indicator manages to come back above 0, then we're going to go to 23,920, and even we can go to 24,080. However, if this indicator goes here to the zero line and gets rejected, then we're just going to stay in this box range. Now, my one advice to anyone doing option buying in today's FinNifty expiry, as long as we are between 23,520 to 450 and the resistance range at 23,750, avoid option buys that are of today's expiry. This is as the decay in this range will be severe, and you will, even if you catch a move, you will not be able to capitalize on it in a big way, as the decay will be eating up more than it should. So within this range, any option buyer who is trying to scalp should focus more on the options which are expiring next week for FinNifty rather than this week. However, if we prop above 23,750, then you can take an option buying long until 23,920, and where you put a tight profit stop and 24,080 if this breaks. On the other hand, if you break 23,450, that's only when option buyers can go short with this week's expiry to this point. So now, option sellers, what should they do? According to me, this zone has proven its mental, and this zone has proven its mental. So tomorrow, like last week, I had even said the same for the FinNifty expiry, that this is an expiry where you have to sell both sides and let the decay kick in. So let's say if you sell in the morning and you put a profit stop to ensure that you're not caught out by any sudden moves, and you walk away with some gains at any point of the day. So I personally will be selling basically calls above 23,920 most likely, 23,850 only if I see we're not able to break 23,750. While I'll be selling puts below 23,450. Why I will not sell 23,520 initially? Because it's simply too close to the action. As if it stays within this zone, it will literally be constantly giving a fear that you might get a sudden injection and get blown through, because if the broker goes down or something else, you're in trouble. So in the earlier part of the day, option sells, I'll focus on selling above 23,920 and below 23,450. Those will be carried with profit stops. However, as we get to the latter part of the day, basically post noon, when the expiry decay will really start kicking in, then is when I will basically, if we are still within this range and we are not able to, the trend catcher basically is not able to come back above zero, then I will start dropping to call sells above 23,750. But I will only do that if the trend catcher is below zero. By chance the trend catcher comes above zero, then I will start dropping in for put sells below 23,520. This is that will let us know how the game is going, which side the seesaw is going. So tomorrow, option sellers again, initially sell calls. I will be selling calls and I'll be selling puts. Keep them with a profit stop. Let the gradual decay keep earning some money. However, as we get to the latter part of the day, number one, I'll tighten profit stops. Number two, if the trend catcher in the 15 and 30 minutes chart is below zero, then I will sell calls more aggressively. If it is above zero, then I'll sell puts more aggressively. So the whole decision will be made for me by the trend catcher indicator in terms of option sells. Now coming to option buys again, only a clean move above this resistance or this support. Within this zone, focus on next week's options, as that will avoid getting killed by decay. So that's it for today's video. I hope you liked it. If you liked it, then hit the like button, and also any questions you may have, you can drop them in the information box below. Thank you.